Welcome and thank you for joining us today. My name is Sean Moss with Down Payment Resource. And today we are going to talk about the basics of homebuyer programs, and in particular, the three most common types of homebuyer programs. We also have with us Fern White, our account manager, and Melinda Harris, our marketing director. They're in the background answering questions as we go, so we encourage you to keep this interactive. Use the Zoom questions feature to add comments, ask questions, and so forth, and we will leave time at the end for Q&A as well. But we do want to keep this interactive as we go, so feel free to log those questions, and they'll be answered by Melinda and Fern in the background. All right, now, our job at Down Payment Resource is to help connect home buyers to the down payment help they need. Our job on your behalf is to give you the tools and resources and knowledge to enable you to do exactly that. So a little bit about us at Down Payment Resource. We provide a database of all of the roughly 2,300 home ownership programs around the country. That covers down payment assistance, closing cost help, affordable first mortgages, mortgage credit certificates, and more. And we provide technology through MLS partnerships and to real estate agents and loan officers to help you become the down payment hero, educate and engage new buyers, and build your purchase pipeline. We are integrated into MLSs with our MLS partners. We'll show you who they are further along here. So we can also integrate into property listing data, and we will talk about Down Payment Connect briefly, which is a tool that is available to you in several ways to generate leads, to engage buyers, to raise awareness of down payment programs, and so forth. Now, today, we are talking specifically about loans, grants, tax credits, and other homebuyer assistance programs that can do a couple of things in particular. Help achieve the down payment faster. We know that's the number one obstacle to home ownership. We see that in survey after survey, and we have for years. These programs can also help cover closing costs. We'll talk about that from the seller agent's perspective as well, and competing in bidding wars and so forth. But these programs can also help renters and prospective home buyers get into a home sooner than they would have otherwise. And we are going to talk a little bit about misperceptions that especially first-time home buyers and especially younger first-time home buyers have about down payment requirements and the home ownership process in general. Now, a little bit of background about these programs. We're going to break down the three most common types of homebuyer assistance. One of those is just obviously down payment and closing cost assistance. Those are the most common type of homebuyer program out there. However, it's important to know that that's really kind of a broad label. That encompasses all manner of grants, silent seconds, soft seconds, deferred loans, forgivable loans, and even repayable loans. So when we talk about down payment assistance, and we'll get into this a little bit more here in a moment, but just know that that's a very broad term. Every down payment assistance program is different. Their requirements are different. The qualifying criteria are different. The benefits, the assistance amount, the repayment terms, they all differ. But just so you know, we took a snapshot of all of these programs across the country just a couple of weeks ago. 65% of all down payment or closing cost programs had deferred payment features, meaning there was no repayment required up front or perhaps ever on that down payment assistance program. 44% of all down payment programs have or are forgivable, either in part or in full. So if it's not a grant at closing, but it is forgivable over time, it essentially becomes a grant at some point, presuming that your client, the buyer or borrower, remains in that house as their primary residence. And almost 40% of all down payment or closing cost programs are both forgivable and deferred. And again, we'll get into this a little bit more in a few minutes. And then you've got grants. Now we're also going to look at mortgage credit certificates, which are tax credits. And we're also going to look at affordable first mortgages, which make up together those two categories, a little more than 10% of all of the home buyer programs out there. Now, there are some other programs like match savings programs, housing choice purchase vouchers, and so forth. We're not going to get into those today. They're kind of outliers in the aggregate, but we are going to talk about the three most common types of programs. We do want to be clear, however, and dispel a myth in the process that these programs are in fact available everywhere. There is no county in the country that does not have at least one, if not many, down payment assistance programs available in that market. And if you think about it, every state has a state housing finance agency, and they typically offer a pretty wide array of homebuyer programs. That means that every state housing finance agency is offering multiple homebuyer assistance options across the entire state. And then if you think about all the cities and counties and nonprofits and local housing finance agencies, we'll look at this in a moment too. There are literally programs, layers of programs in most markets around the country, but every market has something available. And you can see here some of the states that have the most programs. But again, every state has a number of programs available. Now, who offers these programs? I kind of just gave you a hint, but we're talking about your state housing finance agencies. We're talking about cities and counties and municipalities that get home or CDBG or other funds for down payment assistance programs. We're talking about housing authorities, community development departments, nonprofits, employers even, and more. Many of these programs are funded in different ways. We track and monitor at Down Payment Resource which programs have money available right now. And when they run out, we monitor that. When they come back, we monitor that as well. So in terms of funding and DPA trends, we also want to be clear because there's been a lot of volatility this year. We all know that. But throughout the year, throughout the COVID pandemic, every state housing finance agency has remained open, accepting reservations for their funds, supporting their realtor and lender partners, and offering their programs to the public. There are also a lot of local housing finance agencies, same story there. Same with the cities and counties and nonprofits. Earlier this year, we did see some programs suspended. Often they were suspended because of COVID, because they couldn't host in-person counseling sessions and homebuyer education courses and so forth. But we have seen that throughout the year, more and more down payment providers have started adopting online homebuyer education, which was always available. It's been available for a long time, HUD-approved online homebuyer education. However, we're still seeing that almost exclusively that's how homebuyer education and counseling is being done virtually. And so that enables these programs to sustain business. Now, housing finance agencies, especially state HFAs, have been saying for months now, they are seeing record volume to the tune of 50% increases over last year, or maybe even more. And we're not even through the year. We're just into Q4 here. So record low interest rates obviously drive a lot of that. Purchase demand, which we're hearing more and more about, is the spring buying season happening in the fall? Yes, it appears that it is. And if you look at your state housing finance agency and across the country, all of them, they're doing record volume in so many states. And that's purchase volume, right? So we hear about inventory woes, and we all know that, but purchases are happening to the tune of record-setting paces and volumes. And just to be clear, over 80% of all homebuyer programs around the country are right now currently funded and available. And that's not depressed because of COVID. That's actually a pretty normal number. Typically we see between 80 to 85% of all homebuyer programs at any given time throughout the year are funded and available. So we wanted to be clear about that because there have been rumors and misperceptions throughout the year that DPAs are gone or are going away, or that state housing finance agencies shut down, or none of that's true. Now, there have been changes to programs, of course, and we track all that, but that's not new. That's not different. There always are changes to programs. And we know that earlier this year, a lot of change came out of DC from Fannie Mae, Freddie Mac, HUD, and so forth. But housing finance agencies and DPA providers have adapted quickly to those changes to maintain their operations and to maintain the accessibility of their programs. So DPAs are not gone. They're not going away. They're here to stay. And with that, let's think about where we were at the beginning of this year. There was a lot of talk, if you remember, at the beginning of this year. Feels like so long ago, but nonetheless, this was supposed to be the year that millennials busted into home ownership, and it was supposed to be the year that millennials broke records for home ownership pace. And we actually saw a survey in January of this year, so pre-COVID. This was from clever.com. It was their homebuyer survey. they asked potential buyers where they intended to get their down payment from. The second most popular answer at the beginning of this year, especially among millennials, was that they intended to use first-time homebuyer assistance programs, second only to saving their own money. But think about the things that they prioritized down payment assistance programs over. That was prioritized over the potential for work bonuses, additional income, or loans and gifts from family members, or even worse yet, tapping into retirement funds. We hear a lot of talk sometimes about liquidating IRAs or borrowing against IRAs or 401ks for a down payment. Why do that when there are so many down payment assistance programs out there that are a much better financial decision, that can open up the doors to a better mortgage and don't have the penalties of short and long term tapping into retirement assets? Now, we're going to look at some common requirements first, and then we're going to break down payment assistance and mortgage credit certificates and affordable first mortgages. So all of these programs are for owner-occupant buyers. These are for people buying their primary residence. These programs cannot be used for investment properties. They can't be used to buy rental homes and so forth. They also all require typically a minimum buyer investment. And that really comes two ways. The first is obviously cash, right? The skin in the game argument. Most of these programs do require a minimum investment. And then of course, first mortgage guidelines require a minimum investment too, depending on what kind of mortgage they're getting. But obviously these are cash buyers, so they have to qualify for a first mortgage. The other investment that these buyers make are that most programs require that the buyer complete a homebuyer education course, typically a HUD-approved course. In person, it would be roughly an 8-hour class. There are many online options available as well. But that's also an investment by the buyer into this transaction, into their own education, and as a better client for you, because they come out of this class with a better understanding of the home buying process, but also planning for long-term home ownership success. Now, we're going to talk about the renter mindset kind of at the end, but one of the myths we hear out there is that a lot of buyers, especially younger buyers, they believe they need 20% down to buy a home. And that's just patently false. And we all know that because we're in the industry. The challenge is, and the opportunity is, we have to educate that misperception out of the minds of prospective buyers and renters and let them know that, no, you can go zero down for VA or USDA if you or the property are qualified. 3% down, 5% down conventional options, 3.5% down for FHA. So when we think about common requirements and the mindset of renters today, let's also think about the misperceptions that they suffer from, to be quite honest. Now, let's get into the three most common types of homebuyer programs. That was a little bit of background about DPAs in general and some of the overarching universal requirements of homebuyer assistance. But let's talk first about down payment assistance. Now, we already said there are other kinds of homebuyer programs or home ownership programs out there. We're going to get into those affordable first mortgages, and then we're going to get into mortgage credit certificates, which are tax credits. But first, let's look at down payment assistance. So down payment assistance programs are the most common type of homeownership assistance or home buyer help out there. And I mentioned that down payment assistance, or DPA, really is kind of a catch-all term. It can mean a lot of different things, but broadly, these are nonprofit or government-funded programs, sometimes provided by employers. There are employers out there that will sponsor and fund a down payment assistance program to recruit or to retain talent. But these programs can offer anywhere from several to tens of thousands of dollars. In higher cost markets, we see down payment assistance programs that offer a lot more money. Some of these are grants. That is a true gift. It is forgiven at closing. There is no second loan. There is no additional lien on the property. But many of these programs are a second mortgage. And I've already kind of covered the fact that some can have deferred payment features where they get the down payment assistance and they don't have to make any payments, maybe until they sell the home or refinance or something years down the line. Many of them are forgivable. We covered that as well, which means so long as that buyer lives in that property as their primary residence and does not trigger repayment, like by selling or moving out or refinancing, then sometimes 10% per year might be forgiven over 10 years. Sometimes if they stay in the house for 5 years, it's all forgiven at the 5th year. That can vary too. But the point is, there are a lot of different kinds of down payment programs out there, but DPA in general, down payment assistance, is the most common type of home buyer help and available in every market. Now, what can these funds be used for? Obviously, down payment. We mentioned closing costs. Sometimes you can pay your prepaids or escrows with down payment assistance. Not always, but sometimes. Sometimes these programs can be used for repairs or rehabilitation of a property. That would typically be prior to closing, but that is sometimes an eligible use, or to make or build accessibility features or improvements to a property. Now, first-time home buyers. We want to talk about this for a moment. One misperception out there is that down payment programs are only for first-time home buyers. And in fact, about 40% of all the down payment assistance programs around the country do not have a first-time home buyer requirement. That means that not only are first-time home buyers eligible for all of these programs, but repeat buyers may be eligible for a large number or a significant portion of down payment programs. So don't assume that because somebody currently or recently owns a home that they're not eligible for any down payment assistance. In fact, they may be, and you might be surprised by how many programs are available to a repeat buyer or a boomerang buyer, somebody that owned maybe years ago or went through the mortgage crisis 10 years ago or so, maybe even went through foreclosure or short sale. If they have repaired their credit, they're gainfully employed, their income is stable and they qualify for a mortgage, all of this goes back to the definition of a first-time home buyer. If they have not owned a home in the last 3 years, then you're a first-time home buyer, at least in terms of down payment assistance programs. And Fannie, Freddie, HUD, they've got varying definitions, but it's all built around that 3-year rule. If you haven't owned a home in the last 3 years, you're a first-time home buyer. So that's important to remember too, because somebody might come to you and say, yeah, I've owned a home before. That doesn't mean they're not a first-time home buyer by definition. And it also certainly doesn't mean that they're disqualified from all down payment assistance. Now, some terms you might hear, we've covered most of these. A grant, that's a gift at closing. If the down payment assistance is not a grant, it could be forgivable, it could be deferred, or maybe it requires repayment on a monthly basis, even immediately. You may hear affordability period. That's the period over which the buyer must remain in the home as their primary residence to accrue the benefits of deferral or forgivability. You may hear DPA called a silent second, a subordinate loan, a second mortgage. These terms are all basically interchangeable or synonymous. You may hear shared equity. Some programs will offer a portion of the down payment up front in exchange for a share in the appreciated value from the purchase to the sale down the road. That's not quite as common as some of these other features, but those are just a few terms you may hear when you're talking about or reading about a down payment assistance program. Now, in terms of eligibility, the buyer's eligibility, your client's eligibility, most of these programs have income limits. Most of them also have purchase price limits, beyond which the program is not available. However, it's also important to note and to know that those income and purchase price limits are based on market medians for income and for purchase prices. That means that a high cost market or higher cost market, the DPA programs in that market are going to have higher income and purchase price limits based on the median incomes and median purchase prices in those markets. So, location matters, of course, because that tells us what's available, including layers from state, county, city, nonprofit, and so forth. But it also tells us that, okay, in a higher cost market, you're going to see income limits that are 50, 80% of the area median, or often up to 100, 120, 140% of the median income in that market. Those limits, those thresholds are not uncommon at all. So maybe the misperception in there is that these programs are for, low price, low income borrowers, and some are, to be fair, but there are many programs out there in many markets that are for people with incomes above the median in that market. Property location, I mentioned, that determines what's on the table, right? Where is the property? What city is it in? What county is it in? Maybe even what census tract or zip code. We'll talk about how that can be a factor. What state is it in? That determines the universe of programs. And then you get into what's the household income, what's the FICO, what does their credit look like. Most programs have a floor of between 620 and 660 or 680. We don't typically see down payment assistance programs with a minimum FICO requirement below 620. So that's kind of the floor. And remember, they have to qualify for a mortgage too, right? But if you've got a 620 or better FICO, there are probably some down payment assistance options out there for you. Home ownership history, we've already talked about that in terms of the first-time homebuyer requirement, but that is an important factor in determining which DPA programs are available for a particular client. And then we'll talk about these more too, but there are some factors that can increase the number of down payment programs available to a client. That could be military service, that could be profession, and we will talk about some of those professions and the benefits and unique opportunities available to those with military service in their past or in certain professions. Now, what are the advantages of a down payment assistance program? Obviously, lower LTV. That's the most obvious, right? Bigger down payment, lower the loan to value. But let's think about what that causes. What are the things that happen because of a lower LTV? Lower debt to income ratios, right? If you've got the same income and you lower the LTV more, you're lowering those qualifying ratios for that buyer. Lowering the LTV enough can start to improve mortgage insurance pricing. So imagine going from 3.5% down to 5% down. Suddenly, you can do a conventional mortgage, perhaps at a better rate, no upfront mortgage insurance, and cheaper monthly mortgage insurance. So just that little bump in LTV, which can easily happen often with a down payment assistance program, can open the door to better conventional financing. You can also, now let me be clear, when I say better conventional financing, I'm strictly speaking about the financial benefits, lower MI, no upfront mortgage insurance and so forth, and MI that drops once you get to 78, 80% LTV. All of these things equal lower monthly payments, right? If you lower the LTV, you're lowering the monthly payment because you're lowering the principal of the loan. If you can get better mortgage insurance, that's lowering the monthly payments. If you can get a better rate on a better first mortgage because of LTV and so forth, again, lowering the monthly payments. These programs can also supplement cash to close. So forgetting about the payment piece for a moment, cash to close involves liquidity versus equity and that decision for a buyer. Do I spend all of what I have to get into the home, or do I leverage a down payment assistance program to gain that equity, to lower the LTV, and keep some cash in reserve for my home owner emergency fund? So retaining savings, and we've seen studies about this, has a big impact on the long-term success of an owner, especially in the early years, if they've got just 2, 3, 4 months in reserves when they close, and that's another advantage of a down payment assistance program. Also think about this. I mentioned I would touch on this earlier. If you are representing a buyer that has been qualified for a down payment assistance program, since often some of that money can be used for closing costs, imagine going to a seller and your client is the buyer and they're getting offers, or you suspect they will get offers at full price, full asking price. Then if you've got a client with a down payment assistance program and they can use that money in part for closing costs, or maybe they've got a closing cost grant, you could go to the seller, offer full list, not ask for closing costs, and suddenly you've just created a buyer that's got a competitive advantage over other bidders, other people interested in that property, because they're not asking the seller for those closing costs, and the seller nets more in that transaction. All of this, of course, increases the purchasing power of that buyer's income. If we assume that the income remains the same and we start to adjust LTV, ratios, monthly payment, and all these things, the purchasing power of that buyer's income increases, enabling them to buy more, to buy what they need, to buy what they want, to better qualify, and so forth. Now, homebuyer education, we mentioned earlier, this is often required for most homebuyer education, for most down payment assistance programs. Typically, that is going to be a HUD certified homebuyer education course. What HUD is certifying is the content of that course. There are many and increasingly more online options for homebuyer education. We tell you and we track which programs point you to which homebuyer education course and so forth. All that information is part of what we monitor with Down Payment Resource. But the goal of homebuyer education and why we believe in it, and there are studies and data to back this up, the goal is to prepare buyers for this process and for you as their client, but also, and just as importantly, if not more importantly, to prepare them for long-term successful home ownership. They're not just learning about the mortgage process, the home buying process. They're also learning about the obligations and responsibilities and potential pitfalls of home ownership and how to plan for them and prevent those pitfalls and remain in their home, essentially. So we're big believers in homebuyer education, and it is often required to qualify for a down payment assistance program. Now, that was a quick overview. Well, maybe not so quick, but that was an overview of the most common type of homebuyer assistance, which was down payment assistance. Now, there are other forms of help for homebuyers out there. Affordable first mortgage programs typically come from the state housing finance agency. Let's dive into that and look at how that can be coupled, how these programs can be coupled with down payment assistance. So some of the most common features of these affordable first mortgage programs could be reduced interest rates, expanded first mortgage options. And again, these typically come from state or local housing finance agencies, but some of these options include programs that are kind of unique to housing finance agencies that could reduce mortgage insurance costs. Now, many of these first mortgage programs can also, of course, be combined with down payment assistance, both from the housing finance agencies themselves, but often they'll let you layer on maybe a city program or a local nonprofit program with their mortgage and down payment assistance. So there are layering opportunities there as well. And some of these affordable first mortgages can be combined with the tax benefits of mortgage credit certificates, or MCCs, which we're going to look at here shortly. The advantages of these affordable first mortgage programs, similar to DPAs, we're reducing buying costs, lowering monthly payments, better rate, better first mortgage options, better mortgage insurance pricing, and so forth. All of those, just as with a down payment assistance program, achieve the lower monthly payment goal. And again, holding income steady, all of those things compound to increase the purchasing power of your client's income. And of course, as with down payment assistance programs, all of these can help expedite home ownership. Get that buyer thinking about home ownership, understanding the true opportunity, getting them around the misperceptions that they have about down payment requirements and home buying, and get them into a home sooner than they thought they could. Now, that covers affordable first mortgages. Let's look at mortgage credit certificates, which are federal income tax credits. They're common in many markets. There's not an MCC in every market around the country, but where there are, it's worth looking at, it's worth knowing. Typically, they will come from your state housing finance agency. There are some local housing finance agencies and municipalities around the country that offer an MCC. Most often, they will come from your state housing finance agency. Now, the thing about a mortgage credit certificate, or I'm just going to call it an MCC from here out, is that it is a federal income tax credit, not a deduction. So let's step back for a moment. We all know that once you buy a home, you have the option or opportunity to deduct the mortgage interest that you pay every year from your taxable income. And that's good. That's a great tax benefit. But as we hear more and more talk and see more and more change to the mortgage interest deduction, then a tax credit like these MCCs becomes more important and more valuable. Now, a mortgage credit certificate is a life of loan annual tax benefit. It stays with the loan. You get to use this credit every year to offset the mortgage interest cost. And you still, after you take the mortgage credit, the tax credit, you get to deduct the remaining mortgage interest paid. Essentially, how this works is up to a certain portion of the mortgage interest you pay every year, you get to claim as a direct tax credit. I'm not a tax person, but just to simplify, a tax credit is a dollar for dollar reduction of your tax bill, which almost always will play out as more advantageous than reducing your taxable income through a deduction. So the benefits of these MCCs, obviously they reduce your income tax liability even more than the standard mortgage interest deduction. They can be used to increase qualifying income. Some MCC providers will allow you to account for the tax credit at the end of the year that's expected for that buyer through this MCC and annualize that and use that as increased qualifying income. Some of them can also be reissued. These MCCs are issued at closing, right? And by the way, you have to get the MCC before closing. You can't go back and get one after closing. But many of them can be reissued through a refinance from that same housing finance agency. Now, here's a quick breakdown. So essentially, you pay mortgage interest every year, up to 15, 20, 25, 30%. It depends on the MCC program. Of that interest you pay can be claimed as a tax credit. The rest of it can still be claimed as the standard mortgage interest deduction if you itemize your taxes. So here's a quick scenario with some round numbers. Picture a $200,000 home at a 4% interest rate. Already you can tell that this example is a bit dated because we're seeing sub-3 interest rates. But nonetheless, $200,000 home, 4% interest rate, that's $8,000, $8,000 of interest paid in year one. Now let's say the mortgage credit certificate allows you to claim 25% of the interest paid as a credit. That's a $2,000 tax credit. The other $6,000 in interest that you paid still can be claimed and itemized as a mortgage interest deduction. So I'll leave it at that without getting into some heady math or tax advice. Suffice it to say, MCCs are a great value add, especially if it can be combined with an affordable first mortgage and or a down payment assistance program. So check in your market. We'll show you how to access this information. But if there are MCCs available, leverage those opportunities. They're great value adds and long-term life of loan value. Now, that broke down DPA, affordable first mortgages, and MCCs. Let's kind of look back at the big picture. What are some of the universal features and benefits and requirements of these programs? Many, especially at the state level, many DPA programs will offer additional incentives or unique benefits in targeted areas. Now, in some markets, some buyers might be sitting around saying it's too expensive to buy. Okay, fair enough. It really does depend on where you buy. Location really matters when it comes to down payment assistance because in those, well, first of all, the fact that down payment assistance programs are available can help combat that misperception. But in targeted areas, which could be bounded by zip codes, census tracts, city boundaries, entire counties, many state housing finance agencies will offer some of these benefits in targeted areas. They might waive the first-time homebuyer requirement if you're purchasing a home in a targeted area. So even if the program itself requires or is only available for first-time homebuyers, if you're buying in a targeted area, they might waive that requirement. Sometimes you will see more down payment assistance in targeted areas. Often you will see higher income limits than the regular program elsewhere, right? So even for the same program in a targeted area, you may see higher income limits allowed for those buying in a targeted area. Likewise, you may also see higher purchase price limits. Now, of course, they're targeted to specific locations, but depending on where your buyer wants to buy, it's worth looking into whether or not they're buying in a targeted area. Or, if a couple blocks or a neighborhood over makes a difference and opens up those benefits, then it might be worth exploring, hey, what if you bought here, all these opportunities arise. And then we mentioned earlier, targeted professions. So think heroes, educators, first responders, law enforcement, firefighter, healthcare workers. And we're actually seeing these definitions expand this year as we go through this COVID pandemic. A lot of some down payment assistance program providers have expanded their hero definitions for programs that are specifically geared toward those that work in these professions. So again, they may waive the first-time homebuyer requirement. It may be a program that offers a little bit more down payment help specifically for people in these professions. There may be some other benefits too. But if you know that your client works in education, which by the way, doesn't have to just mean a teacher, it could mean faculty and staff. So the school nurse, parapros, custodians, librarians, they may qualify for teacher programs or educator programs. Likewise with law enforcement, you don't necessarily have to be an officer on the street. Maybe you work for the police department, office staff and whatnot. And it could also expand to Department of Corrections, Sheriff's Office, Police Department, and so forth. First responders, healthcare workers. These are professions for which there are in some markets additional programs or unique benefits of existing programs for those in these targeted professions. So profession can make a difference. Just as profession can make a difference, so too can military service. There are programs and benefits out there for those that currently serve or have in the past served in the military. Often the most common benefit is a waiver of the first-time homebuyer requirement. So maybe the general public has to be a first-time homebuyer, but if you've got a military background, maybe you're not subject to that first-time homebuyer requirement. Often these can be combined with VA loans for extra equity and or covering closing costs. So back to the example of approaching a seller with DPA help that allows you to cover closing costs. Think of a veteran. We often say, oh, that's a zero down loan. They don't need down payment assistance. Well, they still have closing costs, right? And that can add up. So if they can use this to cover closing costs, they don't have to come out of their pocket for as much cash for closing, and have the opportunity to approach the seller and say, hey, I can make a better offer and I don't need your help with closing costs. I've got that covered. Or conversely, what's wrong with having a little equity up front, right? And what a great service or value to offer those who have served in the military. I'll give you an example of a program for the military audience. The Penn Fed Foundation has a Dream Makers grant. That's the name of the program. It's a 2-to-1 match up to $5,000. So if the veteran puts in $1,000, they'll match it double, and that's $2,000 from Penn Fed for a total of $3,000. They'll match up to a $5,000 grant. It is a grant. So if the veteran puts in $2,500, Penn Fed will double that and put in another $5,000, and that's $7,500. And from Penn Fed, that's a grant of $5,000 plus the veteran's contribution. And it's forgiven at closing. It's a grant. It can cover closing costs. They do have income and purchase price limits, and they actually do have a first-time homebuyer requirement on that one. But it's a great example of a great opportunity to help a veteran or help somebody that's active in the military get into a home. Now, how can you access all of this information? So, we've broken down these programs. We've talked about universal requirements and some nuances and some unique benefits. How do you access all this for yourself, for your clients, for your lending partners, and so forth? Anybody can go to downpaymentresource.com and for free do a search. Figure out what's out there in a specific city for a specific property address for a particular county. But you can all go to downpaymentresource.com. Now, before I get into some other ways to access this information, I actually want to launch a poll here. Now that we've talked about all this, and Melinda in the background can launch this poll, tell us how often you work with first-time home buyers. Now, we've sort of dispelled the myth that you have to be a first-time home buyer, but, and actually let me clarify, sorry. How often do you work with buyers using down payment assistance? You can click your answer on the screen here. And we just want to know, as we get into how to access this information, how often do you personally work with clients who have used or explored down payment assistance? Okay, so let's go ahead and look at the results here. Okay, so actually this surprises me. I am pleasantly surprised. We usually see that last option nowhere near the majority of our audience. So this is good. This tells us that more of you are aware of these programs, are actively using these programs, and of course, inherently working with loan officers that understand and participate in these programs as well. We typically see an audience that rarely or sometimes works with clients that use down payment assistance. So this is great. We love to see, especially the majority here of you working frequently with buyers who use down payment assistance. In fact, if you have any interesting stories or testimonials or examples of success with these programs, we'd love for you to share them. We'll give you our contact info or just throw it in the chat. Okay, so let's move on. Now, the question here is, after we talk about all this, how do you access this information? You can go to downpaymentresource.com. If you're in California, we partnered up with the California Association of Realtors. CAR members can go to downpayment.car.org, and you can get even more program details about the programs available in your state when you do a search there, as well as some additional marketing tools. And you can direct your clients to finddownpayment.car.org, where they can do a search and get more detail and information about these programs. Here are our MLS partners. These are the MLSs with whom we have fully integrated into their listing system so that any property that is eligible for down payment assistance based on its location and price versus the maximum prices of the programs available, those properties are flagged with a down payment resource icon. I will show you that in just a moment. But if your MLS is listed here, then on agent reports and on client reports in your MLS, you will see a down payment resource button on every eligible listing. And guys, your inventory is eligible to the tune of 60, 70, 80% of your inventory in most of these MLSs is eligible for one or more or many down payment assistance programs. And that's identified by the down payment button like this on those listings. So if you see this $ with a check mark, it will be, usually it's on your single line view. It will also be on the listing detail view, typically above or below the pictures, right at the top with all of your other action icons. Many of you are on Matrix if you're a member of those MLSs, and then some of you may be Paragon or Flex. But if you see this icon on a listing in your MLS, if you're a member of one of those MLS partners of ours, then you can click that and we just show you right there on the screen how many and which programs are available for that property. And your clients see it as well in the client portal when you deliver listings to them from the MLS. If you are a member of one of those MLS partners of ours, you also have Down Payment Connect for free. I'm going to talk about that in a moment. If you're not a member of one of those MLSs, then we haven't integrated with your MLS yet. We welcome the opportunity to do so if you want to propose that to leadership and whatnot. But as far as Down Payment Connect, if you are a member of any of our partner MLSs, then you have this tool for free. You go to your MLS dashboard, click on the Down Payment Resource button, and your unique lead generation landing page will be waiting for you. You can also go to downpaymentresource.com/DPC at the bottom of the page here if you want to subscribe to a paid version of Down Payment Connect if you are not in one of those MLS markets or members of one of those MLSs. Now, real estate agents get their own personalized lead generation landing page. It's unique to you. Consumers come to that page and complete a search for down payment assistance help, trying to figure out or learn what's out there for them. And you can drive unlimited traffic and gain unlimited leads from that page. So you're not buying leads from us. We're offering you a tool to supplement your marketing, provide education to buyers, and help you generate more leads. We see it commonly used in social media, email marketing, on websites, and we actually have an entire webinar dedicated to this. We alternate that with this one every other month. So we encourage you to check that out next month. I'll review a recording of the past version. Loan officers can also subscribe. We have some loan officers with us today. With that version, you get everything that the Realtor version offers, and anybody can subscribe to either version. But with the LO version, you also get a detailed directory of all programs in your state, which you have nonetheless if you're a member of one of our partner MLSs. You can also customize which programs display. So loan officers, you can remain compliant with your company's product decisions and ensure that you're only marketing DPAs that you have access to. And then you also get an eligibility widget to search and compare programs yourself, which again, realtors, if you're a member of one of our partner MLSs, you have as well on our DPR dashboard. Now, Down Payment Connect helps you educate and engage new buyers, particularly tapping into growth markets. The buyer completes a search, you get a lead telling you that they did a search, who they are, what they found, where they looked. You can use this in social media. We see a lot of stuff on Facebook, Instagram, even LinkedIn. We see it embedded into websites in creative ways. And you can also explore the details of the DPA programs in your market. So the reason we bring this up is if you are a member of one of our partner MLSs, you already have all of this, and there's no freemium model, there's no upsell model. It's all free. It's all waiting for you. If you're not a member of one of those MLSs, you can still subscribe to Down Payment Connect, and you can leverage this tool to supplement or enhance your marketing, enhance your reach, and educate new buyers, dispel misperceptions that they suffer from, let them know that hope and opportunity are out there, and then literally give them a path to find that help and connect back to you to talk about that and take the next step. Now, I want to wrap up today with the renter mindset and the renter reality. The renter mindset today, especially among millennials, and actually we're hearing a lot more about this recently, they still want to buy homes, right? They want to leverage low interest rates. They want to take advantage of this crazy opportunity to get sub 3% interest rates on a mortgage. But they also need help understanding the mortgage process. And that's always the case with first-time home buyers. But think about a millennial who grew up through the mortgage crisis 10 years ago, and now COVID, and now low inventory and these crazy low rates. They need help understanding what all this means. They're also more than willing to adopt technology, especially now all the virtual things that we have to do at the moment. So they're willing to adopt your technology without question. They also need to overcome down payment misperceptions. Now, we didn't include this today, but we've done studies and participated in studies, for example, from the Urban Institute, that have surveyed potential home buyers and confirmed that millennials in particular, they still think they need 15, 20% down to buy a home. We have to overcome that misperception to get them to react to our marketing, pay attention to what we're saying, realize the real opportunity and how close they may be to home ownership. Now, that's the renter mindset, okay? The reality today, let's just take stock of where we are and where renters are. Many renters now, especially this year, may be leveraging credit more so than in the past to sustain their lifestyle. Some, however, may be saving money, working remotely, not commuting, not spending on some of the nice to haves and vacations and things like that. So that's two different ends of the spectrum, right? Some may have qualifying ratio issues, while some may have been saving and are even better prepared than they would have been otherwise. For those that are leveraging credit, maybe it's because they're rebuilding employment history. There's been some employment instability this year. Maybe some of them are dealing with income instability. Hours were cut, bonuses were cut, overtime cut, things like that. So we need to be mindful of those things too, and what the impact is going to be, which is going to be cash to close issues, qualifying ratio issues. Well, guess what a down payment assistance program can directly help with? Cash to close and qualifying ratios. We've been through all that now. So with all that, we encourage you to join the Down Payment Insiders, and that is a group of about 7,000, mostly real estate agents and some loan officers around the country, curated by our marketing team, that basically allows everyone a forum through which to learn what others are doing with first-time home buyers, how they're marketing to them, their successes with down payment assistance programs, what kind of marketing is working on social media, what kind of content works, what kind of messaging works, even issues and challenges they've faced, and sharing solutions and how they overcame those obstacles. So this is a group of your peers around the country, engaging with each other, sharing information, sharing stories, sharing successes, sharing best practices. We encourage you to join that group. You can go to facebook.com/groups/downpaymentinsiders and join up with your peers and learn more, get some new creative ideas for how to engage these buyers and build your pipeline. So with that, we'll get into Q&A. As we do, let's put one more poll up on the screen. Tell us what percent of your buyers, Mel, if you can launch that poll. So what percent of your buyers, okay, there we go. What percent of your business is made up of first-time home buyers? And then we're gonna answer some questions. We got a lot of questions here and we got a big audience. But just click your answer on the screen. What percentage of your business is made up of first-time home buyers? And I'll give you a moment to click your answer. Then we'll look at the results and then we'll get into all your questions. All right, Mel, let's go ahead and share the results. Okay. Also interesting. So, we have to wonder, is there a trend in the direction of raising awareness of down payment assistance programs? So I'm surprised that so many of you have more than 75% of your business coming from first-time home buyers. That's great. And quite frankly, we need to be ready for that trend because that's what we were looking ahead toward, late last year. This time last year, the forecast was first-time home buyers are coming out. This is the year of the millennial for home purchase. But a lot of you are getting half or better of your business from first-time home buyers. And when we think about state housing finance agencies doing record volume this year, a lot of that is first-time home buyers. So they're buying. And yes, there are inventory issues, but there are certainly enough inventory for housing finance agencies to be originating and closing billions with a B more in mortgage and down payment volume this year than they have in even last year. So all right, let's get that off the screen here. So info@downpaymentresource.com. That's our email if you have questions after the webinar. You can also go to downpaymentresource.com/reports. So we encourage you to go there to see some of the information that maybe we referenced today, some of the studies that we talked about or the data, and you can explore those on your own. Now, Melinda and Fern, what's going on in Q&A? Any trends that we need to address? Are we seeing the same questions multiple times?
This has been such an amazing group. Honestly, we've had so many good questions. First of all, I want to apologize. That was my bad on the poll, Sean, launching the wrong one because we had a couple of people comment that there was some confusion there. So I apologize, guys, on that. I also want to let everyone know, because we have had this question quite a bit, we are sending out a recording of this session after the presentation. So if you missed any part of it, don't worry. You can watch the recording at your leisure. Sean, two questions that I saw that came up that I thought was good. Someone wanted to know if you could layer down payment programs.
Yes, absolutely. Not every program can be layered. Not every program can be layered with every other program. So it really does depend on the program. However, as a general rule, with a state housing finance agency, it's pretty common that you can also layer in a local, like municipal or nonprofit program. Sometimes you could layer even, two different, maybe a city and a county program. I see a question in here, can the MCC be used in conjunction with a USDA first? Yes, sure. So, you could layer an MCC with a down payment assistance program potentially. Now it depends on the program, it depends on the funding source, and of course, when you layer, you have to qualify for the most restrictive requirements because you've got to get your mortgage, you've got to get the DPA, and then if there's another DPA, you have to qualify for both, right? And one may have more restrictive requirements than the other. So it's certainly possible. Work with your loan officer to figure out, what the options are. And your loan officer is going to know the details of the programs they participate in and which can be layered and how to do that the right way.
Another question, Sean, that's come up quite a bit, and I've tried to answer as much as I can, but I think it would be beneficial for the group. A lot of people have asked how to find loan officers that work with down payment programs.
Yeah, that's a great question. And so we didn't really cover that at all, I guess. So a couple of things. Let me go back to our MLS partner list. If you are a member of one of these MLSs that I've just put back on the screen, then when you click on the down payment button on a listing, either on the agent single line or listing detail, one of the first things we get, you get the results of DPA eligibility. So you find a listing that you think your client likes, you click the down payment button, which looks like this. We give you the list of programs available for that property. If you want to drill down into the details of any given program, then we allow you to do so. And the first thing we tell you is who the participating lenders are, or provide links to participating lender information as published on the program provider's website. So if it's your state housing finance agency, we're going to link to their participating lender list. Those are the lenders that offer the program, right? So they're not our partners. They're the program provider's partners, the DPA provider's partners. That's one way if you're a member of one of our partner MLSs. if you're using Down Payment Connect, when you get a lead, you can also open up the details of the programs that lead found in their search, because we'll tell you who the consumer was, where they were looking, and the programs they found. In that lead email, you get links to explore details of those programs that your lead found. And again, one of the first things we provide to you is participating lender information from the program provider. That's kind of, and honestly, if you go to downpaymentresource.com and you do a search, then same thing. You can drill down into the details, including participating lender information. So anywhere you're using Down Payment Resource as a professional in the industry, we're giving you information about participating lenders. I will also say, talk to your loan officer partners. Who are the loan officers that you work with now or frequently? Maybe the topic hasn't come up recently, but ask them which down payment assistance programs they participate in, and come up with a strategy for how they're going to handle your first-time homebuyer leads to make sure that these options are explored, that nobody's sent away because cash to close is the issue. That shouldn't be a reason somebody doesn't apply or somebody gets declined. Not that alone, right? So anyway, I hope that helps. Those are a couple different ways to access lender info. And I'll leave this list of MLS partners up on the screen. And remember, you have Down Payment Connect for free. You have these icons on eligible listings for free. You can access all this detail all ready, integrated, and waiting for you if you're a member of one of these MLSs.
Hey, Sean, just as a follow-up to that, another question that has come up is why does it seem that certain lenders hesitate to work with down payment assistance programs?
Yeah, so that's a great question. I'll start with, look, let's just be honest. Not every lender participates with down payment assistance programs. Even within one brand, one lender, one bank, not every loan officer is aware of or participates in these programs. So, part of that is a credit policy decision on behalf of the lender. As a company, they have to, build their credit policy and decide, from a product perspective, what do they want to offer? What do they have an appetite for? So that's kind of step one. Some choose to do housing finance agency programs from the state. Some choose to do, city and county programs. Some mix them together. Some just don't participate. But I think, if you look at the list of participating lenders with your state housing finance agency, you'll probably be surprised at how many companies and how many loan officers are listed there. So maybe it just hasn't come up in conversation. But we can't speak for every lender. I can just tell you that you're right. Not every lender participates. And even if the lender does, not every loan officer knows about DPAs or participates. So it's important to get to the right loan officer as well. But, every lender is different, just like every brokerage is different, just like every DPA program is different. So, that's their decision. But the ones that do participate, those are the ones that you need to partner with.
Great. Thanks, Sean. Another question that I've seen quite a few times in the chat and Q&A is that some lenders are informing buyers that down payment assistance funding is no longer available due to COVID. Can you speak to that a little bit?
On the whole, that's false. There may be a program here or there that has run out of money, which, by the way, is the norm. A lot of city or county or nonprofit programs, they'll get money at some point during the year, and it's good for a year or a fiscal year. But often they'll run out, and that's a good thing, right? That means more buyers were served, or all the buyers that could be were served. DPAs are not going away, and I tried to cover that in enough detail early on. Every state housing finance agency is open. Yes, product and pricing options may have changed throughout the year. That happens in any year anyways. But yes, some of that was related to COVID. But their programs aren't gone. They might look a little different than they did a year ago, but they're still there. Interest rates are still at record lows. Cities, counties, nonprofits are still, offering DPAs. We've loaded, countless new programs this year. So new DPAs are still coming out from municipalities. So, that could be part misperception. It could be that they heard that one program ran out of money and assumed that it meant all DPA. Use Down Payment Resource. We'll show you what's available. I mean, maybe that's the simplest answer.
Great, thank you, Sean. Another question that I've seen multiple times is around the lead time in terms of applying for and getting approvals for DPAs.
As in when to start the process?
Yes, when to start the process and how long does it typically take?
So two answers. When to start the process, as early as possible. It's never too soon to talk to a prospective buyer and say, hey, there are down payment programs out there. Don't wait 5 years to buy a house. Explore it now. Here's the path. I'll show you. I'll give you the resources. Talk to a loan officer. Get pre-qualified. Take your homebuyer education course. The certificate of completion is good for at least 6 months, probably a year. So you've got a window of opportunity. But the important thing is, don't sign a contract and then say, oh, well, what about cash to close? That conversation has to happen before you get that far, before your client gets that far down the road. And that's where a lot of perceptions about, DPAs take longer. That's where it comes from. They didn't do their homebuyer education course, and so they had to stall and do that. Or they didn't talk about cash to close or anticipate, something that was going to impact cash to close. And so it became an issue while under contract. If all that stuff is done up front and all those conversations happen when you meet them and when you intake that client or onboard that client, then there's really no reason that a DPA transaction should take longer than any other. Maybe a cash transaction goes faster, but anybody getting a mortgage, a lot of down payment assistance program providers will tell you they can process loans as fast as any lender can. The hiccups are, oops, we forgot the homebuyer education class. Oops, we forgot this or that, or there were a couple of days delay here and there, passing documents back and forth. This all goes back to your lender. The loan officers, your lender partners that understand these programs and do them frequently and know the guidelines and they know the staff at the down payment provider's office, they know how to do this and they'll close it just as fast as they'll close anything else.
Great, thank you, Sean.
So what else? Any other trends? They're still coming in. My goodness,
Yeah,
you guys are.
they are still coming in. I was just reading through a couple.
One thing I will say, we've had quite a few asking. I just want to, if you don't mind, Sean, explaining one more time, just differentiating. If I know you have the partners listed on the screen, which is great, but just kind of differentiating if you're a member of a partnering MLS, here's how you access DPR, and then if not, we have DPC available. I just feel like I've been answering that question quite a bit, and I just want to make sure it's clear.
Yeah, sure. So for anyone who's a member of any of the MLSs on the screen right now, you have a down payment resource button on all eligible listings in your agent and in your client reports that'll give you all the details about all the programs available for that property. You also have Down Payment Connect as part of your membership with these MLSs. If you are not a member of one of these MLSs, there's two things you can do here. You can go to downpaymentresource.com and just do a search, right? Figure out what's available in a county or city near you where you do a lot of business and explore the programs. You can also subscribe to Down Payment Connect. Now it's free if you're a member of a partner MLS. If you still want to leverage the opportunity to, use the topic of DPAs, use a lead gen tool that puts a solution in front of people suffering from misperceptions about down payment requirements. If you want to supplement your marketing, enhance your reach, and educate more people, then downpaymentresource.com/DPC is where you can go to subscribe to Down Payment Connect and use that marketing tool to reach more people. It's, $24 a month for the realtor version, $39 a month for the loan officer version. And you can see at this website the features that you get. It's month to month, pay as you go. So anyway, check that out. If you're not a member of one of our partner MLSs, just go to the website and just look. This webinar isn't really to sell Down Payment Connect so much as it is to show you information about these programs and help frame the opportunity so that you can meet the needs of these prospective buyers with the solutions that are already out there. And then, yes, we have a tool to help you do that. But big picture, we're just trying to show you the topic and the solution. And then if you are interested in the tool, feel free. If you want to write your own content and and engage buyers your own way, that's fine. But we have Down Payment Connect as well, if that helps you. So Melinda Fern, I see we still got a huge crowd here. Why don't I just go, I'm gonna just go from the top down on the ones that haven't been answered yet. And guys, this is great. This is so interactive. I don't think we've gotten this many questions on a webinar in a long time.
Yeah, that's what I was going to say, Sean. If you just want to start answering, I know Fern's probably doing the same. I'm typing away. So please keep asking questions.
Yeah, so let me just kind of rapid fire address some of these, maybe a couple more minutes here. And then while I do that, let me go ahead and get everybody our contact info. If we don't get to your question and you still have questions after the webinar, then you can reach out to us at info@downpaymentresource.com. All right, so I'm going to start from the top here. M. Cruz Cordova asks, why does Miami-Dade County make it impossible? Look, every program is different. Their protocols are different. Their funding sources are different. In Florida, you've got SHIP funds as well, State Housing Initiative Program. That's been somewhat volatile this year. That's somewhat related to COVID, but nonetheless, every program is different. And, maybe there are programs in cities in Miami-Dade County that you might want to look at, plus Florida Housing, plus there are local housing finance agencies. We're not going to turn you away from any one program. Not sure what made it hard. Maybe it was one transaction or one off. Maybe it was something that got forgotten along the way and caused a delay. But anyway, don't give up. Just, explore all your options and find a loan officer that knows the programs and can help. All right, let's see. Iris asks, thank you. And from there, I assume that I can link it to my website. Yes, if you're talking about Down Payment Connect, Iris, you get your own landing page, so you can post that, you can drive traffic to it and so forth. Let's see. Ramiro asks, who's the speaker? I'm Sean Moss with Down Payment Resource. Jeannie asks, let's see. Jeannie was interrupted by a client's call. Hey, by the way, if you have Down Payment Connect, post it. Post it now. Sometimes we ask at the beginning of a webinar, hey, go get your Down Payment Connect link, post it on Facebook, and see if you get any interaction before the end of the webinar. And it happens all the time. Let's see. Tucker asks, my VA buyer wants to have all of his closing costs paid for. How much is the VA assistance program able to cover? So it's not that there's a VA assistance program. It doesn't come from the VA. Obviously, the VA mortgage does. But our point, Tucker, was that there are programs in many markets with unique benefits for veterans or active duty. I would encourage you to check out the PenFed Dream Makers Grant. That'll be a 2-to-1 match. They'll match up to $5,000, which means the veteran would have to put in $2,500, and then PenFed will match it by doubling it as a grant. So that's another $5,000 from them. So, if your veteran's got $2,500 plus the grant, that's $7,500 that could be covered. And then, of course, it depends on the purchase price and everything too, as to how much closing costs are on the table. But anyway, hope that helps. And then check out other programs. Use Down Payment Resource to identify programs that are unique or available for veterans in your market, if there are any. Let's see. Wendell asks, I have the Down Payment Connect link attached to my email signature. Is this still a valid way to find information about the eligibility and lender participation? Well, it sounds like you either subscribed or you're a member of one of our MLS partners. You can go to your MLS dashboard and click on the Down Payment Resource button there where you got your Down Payment Connect link. And there are all kinds of other tools there for you to do a lot of research about DPA programs, eligibility info, lender participation info, and so forth. So try that. Andre asks, Andre, I'm not sure, what does it mean? I'm not sure what you were looking for there. If you can clarify. Let's see. Wanda asks, would a client qualify if they're using a co-borrower? Potentially. Now that can differ by program, and it's important to work with a loan officer who knows those requirements and understands when that's allowed, when it's not allowed. There's not really one universal answer. It just depends on the DPA. But yeah, there are certainly plenty of programs that allow co-borrowers and even sometimes maybe non-occupant co-borrowers. Danette asks, is DPA available for out-of-state owner-occupant buyers? Danette, not quite sure what that means. If they're moving into your market from out of state, then yeah, sure, absolutely. It's all about where they're buying, not where they're coming from. If you mean they're going to live out of state, then I'm not sure how they're an owner occupant buyer. What is the lead time? Actually, I think we already covered this. Let's see. Darlene, I heard that too. I think so. Some of you are saying that you're hearing that DPAs are not available. Hey, look, we track every program in the country. 80% of them are available. We haven't seen a material difference in the availability of down payment assistance this year, despite COVID. So, sometimes that's just a misperception. Sometimes it's one experience or one piece of news, or information about one program was just generalized to mean more or broader impact. Use our tools. We'll tell you what's out there. Let's see. Zena asks, can you talk a little bit more about renovation loans with DPAs? There are some programs out there that will allow you to improve the property or repair the property. They're not quite as common. It's really best that you just look at what's in your market through any of the methods we talked about today, and see what's out there. Let's see. Bray asks, as new DPAs are created, will they or can we be updated? In a sense, we don't provide updates necessarily anytime a DPA is created. However, whenever you're using any of our tools, you're seeing in real time what's out there. So I realize that's not the perfect answer, Bray, but as soon as a program is created, we load it and it's available immediately in our system. So in that sense, yes, you can find new programs. Let's see. Nina asks, how can you verify the income criteria for down payment assistance programs? We provide a lot of information about that when you're looking at program details, especially if you're subscribing to the loan officer version of Down Payment Connect, or you get a lead with links to program criteria, or you're a member of our MLS partners and you use some of our research tools. There's all kinds of information about the actual income limits themselves by household size, and then sometimes more detail about, is it household income, everybody in the household, or is it just the applicant's qualifying income, and so on and so forth. Let's see. Audrey asks, do I send my clients directly to the Down Payment Connect website to check on qualification? Yes, that's a great way to engage your client. If you're already working with them, you've already got their contact info. It's not just for lead generation. It can absolutely be a value add that you offer existing clients to start that conversation, and maybe to get them thinking more and more seriously about down payment requirements. And again, understanding that these opportunities and these programs are out there. Let's see. Barbara asks, are the home buyer courses free? No, they're not that expensive, but they're not free. The cost varies. I mean, we've seen $50 to $100. One time, take the course. Often that can come with counseling services and resources as well. It depends on the DPA provider and the course they use, or course provider they use. Let's see. Cheryl will send out a recording by tomorrow. Let's see. Audrey asks, the NACA program is a separate program. Yes, it is. That requires some longer term participation. We track kind of government funded and sponsored DPAs. Let's see. Ursula asks, some DPAs have a 60-day closing time. I would question that statement. Sometimes it may take up to 60 days, but we actually did a study recently where, with one of our MLS partners, we looked at the days on market of all transactions, and then the days on market of transactions known to have used a down payment assistance program. The difference was 3 business days. So, there are any number of reasons why a transaction can be delayed. With the inclusion of a third party, that down payment assistance provider, it's easy to put that on the DPA provider. But we've seen data time and again suggesting that that's not really the case on the whole. So, a good loan officer is a critical component of a successful closing, especially with the down payment assistance program. and if something went wrong, or maybe there are some DPAs out there that might take a little bit longer, but as a general rule, that's not necessarily the case. Let's see. Wanda asked, will a buyer qualify if using a co-borrower due to credit? So Wanda, the co-borrower and their credit is not going to fix or offset the credit of the buyer. So the buyer still has to have the credit to qualify for the mortgage and for the DPA. Their lack of credit qualification cannot be overcome by a co-borrower. Co-borrower's credit is accounted for, but it does not offset the credit of the buyer. Shonda asks, do most DPAs require a second underwriting? Sometimes. There are some intermittent reviews that some DPA providers want to perform. Maybe they want to confirm income calculation, do a quick underwrite, see the appraisal, things like that. Again, every DPA is different. Your lender will know the process. But yes, some of them will require a review. And that's actually one of the places where delays happen, because the lender's got to get the documents to them. Maybe their turn time is 48 hours, but if it takes 2-3 days to get the documents to them, then that's a couple of days lost, right? So those are the kinds of things where these little hiccups occur. And then, often it's presumed that the down payment assistance provider was the cause of the delay. Let's see. Darlene asked, how long is the homebuyer education course? In person, it would typically be about an 8-hour course. Online, your buyer can do it at their pace. So it could be 4 or 6 hours. It depends. They're going to learn a lot, and they're going to be a better client for having taken it. And quite frankly, of more value to the buyer, they're going to be a better owner for having taken that course. And we should be mindful of that as well. Let's see. Miami Gardens has a down payment assistance program. Yes, Andrea, that's true. There are other programs in Miami-Dade County, and likewise across the country. Check the county, the city, the nonprofits, the state. There are all kinds of entities, as we saw earlier, offering these programs. Let's see. We got a lot of stuff in here, so I think we might have to wrap this up. These questions are still coming in, guys. We've answered hundreds of questions at this point. We said we would do this for an hour, and we're almost 20 minutes past. So in an effort to be mindful of your time, we want to thank you. We still have a huge audience here. This has been great. We appreciate you guys joining us. We love this interactivity. I hope you all found this useful. We hope that if you need a new way or a creative way to educate and market to and engage with new buyers, then we hope that we've given you a path forward here or some ideas in order to do that. So we'll go ahead and call it here, and reach out to us if you have any further questions at info@downpaymentresource.com. Thank you again for your participation. Mel, thank you for help with the Q&A. Fern, thank you for help with Q&A. You guys have a great day. Let us know what you need. Use our tools. Go out there and let's dispel these down payment misperceptions and show prospective buyers the path to home ownership. Thank you.